The key point to our outlook is that the global economy is moving on to a more sustainable path as it becomes less dependent on the United States and the base of growth is broadening. Our forecast continues to be that we stay sticky on inflation, we stay resilient on growth, but there clearly are some things we need to see, and I think there's at least two uncertainties we should focus on. One is the continued elevated interest rate environment that contrasts with financial conditions that have actually been easing broadly this year. And I think it is something which adds uncertainty as companies do face higher borrowing costs, as balance sheets are adjusting to higher interest rates. But we're seeing equity markets reach record highs. We're seeing the spread markets and credit more generally behave well, and capital is flowing to key emerging markets at this point in time. The second thing, of course, is the political environment, which has a number of uncertainties around elections, has a number of uncertainties around geopolitics. Perhaps the biggest one is the U.S. election in November. We think the most important risk around the election would be the resumption of a trade war, which in 2018-19 actually had a significant negative impact on business confidence, had an effect on depressing business spending, capital spending particularly. And if we entered in another one, as is being threatened by the Trump platform, we're almost certainly going to see retaliatory action elsewhere. And the potential negatives for that on growth, we think, overwhelm some other things that might be happening in the U.S., perhaps on fiscal policy and the regulatory front.